Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. No, it's not. It's NFP Live. Gotcha. In any case, we've got really a big-time show coming up for you today. We're ready to roll. A few things that we have to take care of first is, we've got to get our expectations out of the way for this US NFP report. We've got several trades that are up and rolling, and I think that we're going to have a pretty darn good opportunity to make a few bucks here. So right now, I want to welcome everybody that's out there in YouTube land. I want to welcome everybody that's all around the globe here. I think that we're in an interesting position today on today's NFP report. I think that there's a lot of questions that are going to be answered, and they're going to be answered relatively quickly. I think it's absolutely key that we stay patient and that we understand exactly what we're going to do. So good to see everybody back in the trading room. Good to see everybody. Wizard Alvin. Let's see who else is in there. Mark Corp, Bobby Bob Dibble, the usual suspects. So it's good to see the team back at work today. I think that this is going to be an interesting non-farm payrolls number. The revisions are going to be absolutely huge. Ben Kitchen, good morning from Mississippi. All right, good to see you, Ben. Welcome to the program today. What we're going to do is we're going to give you a quick rundown of what NFP is. We're going to take it through. We're also going to get you right out to price action so we can take a look at a few trades that I want to be aware of as we rock and roll into this NFP report. JC, good to see you, Jay. All right, we've been this is our pet rock. I call this our pet rock because the market hasn't moved. This is a good example of our 920 EMA trade that we placed yesterday on this dollar yen. A couple of observations very quickly. I'm working on the 920 video. I saw Wizard was asking about the 920 video earlier, and it's coming out next Friday, so you're just going to have to wait. We sort of got behind a little bit here. Been an interesting month, that's for sure. In any case, 920 with RSI confirmation. So what we're looking for is the 9 EMA to cross the 20, and then you're looking for that RSI. What do you got down here? We were in oversold territory, so we were looking to buy this market on a crossover. We didn't quite get the crossover there. We sort of reviewed that yesterday. Right there is where we got our crossover, and then it immediately pulled back in our face. One thing I do love about this trade is that our stop loss is dialed in. It's a good stop loss. We put it right beneath that previous swing low, which is right down there at about 149.60, something like that. Rallied up, bang, bang, and then we've just sort of been compressed. And then you sort of got that big break in the last 4 hours, and right now we're milling right around break even. Officially, we're gambling with a number like NFP coming out here in about 9 minutes. We are officially gambling, and I want everybody to understand that if you're holding a position right now in the majors or in commodities or in precious metals, this NFP number is going to bring heavy action. And when it brings heavy action, we don't know which way the market's going to go. We have absolutely no clue. Why? Think about it. Order flow. This game is all about order flow. NFP will bring a ton of participation, a ton of new orders to the market. Everything that's already sitting at the market is going to get triggered, and what happens? Happens exactly what happened with Bitcoin at 100,000. We're going to talk about that in a second as well. I also want to review this position. This is an interesting trade. This was just a basic supply zone buy, or demand zone buy, whatever, supply, demand. I call it support and resistance. This seems like the new generation of trader calls it supply, demand, whatever you want to call it. The bottom line is this. You really had a nice double bottom on this 4-hour chart, and we were lined up and ready to rock it and buy right there, and we did. We bought it right there, though. You did get a big sweep, got a sweep lower, and then you got a pretty good rally. So this gold trade's in the green. Once again, if you're holding anything right now, you are gambling. I got asked this question, though, after the stream yesterday. Shane, where would you have your stop loss? And I said, well, a couple of options. That's attractive. Down beneath that swing low right there that came across the board back on Monday, let's see, in November, the 25th of November, a couple weeks ago. That's not a bad one. The question is do you really want to buy 25s and risk about $21 on a gold market? If you're going to do that, you've got to be low leverage or trading a micro futures contract. We're going to start talking a little bit more about futures just because I think that gives us a lot of opportunities. But I also realize that our international crowd, most of you guys are trading spot gold, not gold futures. So good to see everybody. Wow, we got some new faces. David Forty, good to see you, David. Let's see, Universal, always a pleasure, Uni. Ivishen. Hi, Shane. Greetings from Thailand. I'm on the road today, so I'm not in the trading room. Right on. Well, I sure appreciate it. Travel safe. Always travel safe, no matter where you are in the world. I'm not doing much traveling probably until 2 weeks and when Christmas, and then we'll be all over the place there. But that's a good look at the gold market right now. I'm watching this position. I think that was a pretty good demand zone buy. But what happened right there? It washed out the level before it reversed. You're going to see that more times than not when it comes to basic market structure. Take a look at this, Bitcoin. We've talked about Bitcoin all week long. We talked about 100 breaking out over 100,000. What happened? Look at that craziness. The same thing as NFP. Listen, big level, 100,000 gets triggered. What happens? There's a bunch of stop losses up there. There's a bunch of profit taking. There's a bunch more momentum algorithms getting involved. And what happens? The market goes absolutely crazy. Now, this is textbook. If you're new to trading and you don't understand price action, this type of formation is what we see more times than not, especially around a key level. So what happened? We had a run. We ran 100,000, and then we reversed, and look at, we broke all this daily market structure, that spike low that was developed back on Tuesday. That got washed out, and then we bounced right back up. You're still incredibly bullish here. But you have to respect the sellers that are dug in right in front of 100,000 in the derivatives market. Jeffy, good to see you. Jeffy, Bobby Bob. The big picture here is you've got a giant triangle going. That's the bottom line. So if you're trading Bitcoin right now, you've got a giant sort of triangle going. A lot of people call this the squeeze, something like that. And of course, you'd say, well, what about that high right there? You don't worry about that. That's sort of what I would call noise at this point. Boy, I still like this one to the top side, though. I think it's going to be pretty good. Let me see, NRT, good to see you. NFP, all right, guys, let's roll. Let's get with the program. We got about 5 minutes to preview this. Remember, if you need a place to trade, get on there to Switch Markets and check it out. Cyber Week bonuses, you got about 18 hours left. So if you're interested in getting the iPhone or taking a shot at it and the bonuses, everything, get on it. NFP today, Friday. It's not November 6th, it's December 6th, but that's okay. What is NFP? It is the primary measure of the U.S. labor market. And what that means is it counts the number of workers in the United States. Here's how we trade it. Everything's based on relative analysis. You're going to be looking at NFP relative to what we expect and also to the previous release. Our previous release was a doozy. More about that in a minute. So what happens when we release NFP? If it's above expectations, it's going to be bullish for the USD. Why? Because the Fed can raise interest rates and not kill economic growth. Remember, the Fed has two jobs. The United States Federal Reserve, two jobs. Promote pricing stability and what else? Promote maximum employment. As soon as those employment numbers look like they're hot, that means that they can raise interest rates and sort of seek that equilibrium rate of inflation, which is right around 2%. The Fed's nowhere near it. They've botched this one in a big way. I've been a big-time critic of them, but hey, that's just me as a trader. I don't let my opinions interfere with my trading, but wow, the Fed is in deep water right now. Below expectations, that's bearish for the USD. If you see a real low jobs number, it's going to really bring out the desire from the Fed to cut rates. And they want to cut rates to promote economic growth. That's what you need to know about NFP and its impact on the Forex, and specifically the US dollar. Commodities and equities is going to be opposite. Above expectations is going to be bearish. Why? A stronger dollar is going to send stocks and commodities down. And if we're below expectations, it's going to be bullish for equities and commodities, because we're going to put more money in the system to try to promote economic growth. Relatively simple stuff, guys. Now remember, you don't have to be an economist to trade. You just need to know what's going to happen in the market. So these are our expectations for today. Last one was previously 12,000. Horrible number. Absolutely horrible figure. 12,000 there projected. We're looking at for 202,000 today. Now, I've been an outspoken critic of these numbers all year long. I do believe that the books have been cooked for political reasons, and that's been happening pretty much since March. Since February. There's no question about it. We have no idea where this number is going to land. I won't even venture a guess. I'm looking for downward revisions, and I'm also looking at the unemployment rate. Unemployment is huge. It's a huge political football. We're expecting it to tick higher today. A lot of folks are saying it's going to tick way higher. Be ready for a blockbuster number today. We have no idea what's going to happen. None. Right here, though, I do want to get out to this employment situation. This was the last one. I'm going to be refreshing this in 2 minutes to try to get the actual report. And what I'm looking for, the devil's always in the details. We go down to the last paragraph, and we want to see the revisions. August was revised down. September was revised down. I want to see the revisions. Did October's numbers come in negative? I think there's a real chance that that is the case. So let's go ahead and get back out to price action here. What we have going is an interesting dynamic on our E-mini S&P 500 if you're a futures trader. I think there's a real clear-cut support zone. I'm still in buy mode. Now listen, this is going to change. I really can start building a strong case to the short side of this market, at least for the next 6 months. I think a correction is probably likely in early 2025, especially if the Fed doesn't cut rates. If they don't cut interest rates, look out. Let me see, MRT, gold sell and the US dollar buy. Well, I mean, I'm not really on a gold sell just yet. I think that I don't know what's going to happen with NFP. I really don't, and I don't think anybody does. I usually say we're going to get a weaker number than expected, but boy, the books have been cooked the entire year, and right now with a minute to go, I would love to buy that pullback from 6,057. Let's take a look at our gold market. Here's our 4-hour supply or demand zone. Once that gets taken out, you're going to see probably a big-time run. So you could be right there, MRT. For me right now, though, I would love to buy a big-time pullback, and we'll pull those macro numbers here in just a second. And as far as our dollar, sort of our pet rock, our dollar yen, we're sort of, right at break even. Nothing ventured, nothing gained, right? And after the release, we're going to get a big spike of volatility. Then we're going to dial into some of these other markets, maybe take a look at something like the Great Britain Pound USD and try to scalp it. I think this is an interesting zone that we're coming up on from a resistance standpoint. And you'll notice right there our weekly numbers on the Forex, usually very strong. I would love to step up and sell something like 128.25. Would love it. That's up there about 50 pips, excuse me. So here we go. The bomb's getting ready to drop. 1, 2, 1. Okay, here we go. That should be out. What exactly is going on? Let's go ahead and take a look at our gold market. Okay, gold's up. So right there, we're in very good position on that trade. That's fantastic. 227,000. Bryn 98. 227,000. I don't believe it. I don't believe it. How do we go from 12,000 to 227,000? That's ridiculous. In any case, you can see that this gold right here is fantastic. If you wanted to put a runner on and you're long from that demand zone, I would move my stop loss right beneath that swing low and really shoot for the moon. If you wanted to go to the top of market structure, maybe somewhere right up in there, could be a pretty good take profit for you. For me, though, boy, it would be really tough to turn down the money right now. We just got to wait and see what happens to these markets. As far as the dollar yen, absolutely nothing. A little bit of chop. You've got some chop right here. There's our stop loss, and now we're sort of bouncing off of that 150 even level. I would be watching this relatively closely. Remember, that strong NFP number is going to lead to what? Think about it for a minute. It's a hawkish dollar. It's a hawkish dollar. If it came in at 227,000, that means that typically the Fed's going to step up to the plate and say, okay, listen, we do have a little bit of a problem with inflation. You guys got a big problem with inflation. Okay, maybe we don't have to cut rates. I think the rate cut for December is off the table with that number. I really do. We're going to see right now, though. I'm going to cursor over and check a look at the expectations and actually read those revisions. That's what I want to see. Let me see. I'm blown. MRT, I'm blown. Never mind. In profits. Don't worry about it. I mean, what happens is with these huge economic releases is you get into a situation where the market is absolutely chaotic. So right there, you can see we were way up. Now the gold market's reversing. And it's our job as traders to try to figure out exactly how to trade this thing. It looks like it's coming off. It might actually wipe us out. So interesting stuff. As far as the Great Britain Pound USD, this number should drive this pair lower. It's hawkish for the US dollar. Right now our dollar index is right around even, but this should be a bearish market driver for the Great Britain Pound USD. I would love to get that overreaction up there to 128.25 and then just step up to the plate and sell it. Let's go Euro USD. This was an interesting trade for us earlier this week. We ended up getting on the long side of this after some pretty good scalping from right around 105.62, but now we're grinding higher. And once again, I would love the back end of my Fibonacci's, the back end of my golden zone right there at 107.05, selling right in front of 107. That's probably a fantastic figure. Probably a fantastic trade, and that's what I'll be looking to do more than likely towards, if we get this early session, I would have every confidence in stepping up and selling this thing. But for right this minute, I would be on the sidelines, and there it goes. All right, the dollar's officially fading against the majors. We're starting to see a little bit of dollar weakness, which doesn't make any sense. But remember what we said. What happens to these things when a big number drops? It's unpredictable. It's like the EIA crude oil report every single Wednesday. It's wildly unpredictable. We don't know what's going to happen because orders are in the queue, resting at market. Huge participation comes in, and the market blows up. That's why a lot of professional traders wait these out. They sit around. They wait 10 minutes and let the dust clear before getting into the market. I love what's happening here, though. You got a nice big rally. We've got an opportunity there potentially to get in and make a few bucks on that sell. So I'm looking right there, probably 106.95-ish. That would be your short. Stop loss would be up there at 107.29s. Looking for a nice big, what I would say probably a nice big 30-pip move, 25-pip move right from the back end of that golden zone. A lot of confidence in my weekly numbers, a lot of confidence. So if those come into play, look out. How's gold faring? Gold's just rotating around. So if we were going to, let's say we wanted to do some impact scalping here, what could we really do? That's your 5-minute bar. That's impossible trading. It really is. And that's one of the reasons why I urge using longer time frames. This right here is what the market does pretty much to everybody. And this is why a lot of traders lose and they really get negative with their trading. No matter how good of a technician you are or a fundamental trader you are, this will happen. And I get this a lot. I mean, a lot of folks out there are smart money traders. It's by far the most popular way to trade right now in the markets. And all the decisions are based on market structure. So right there, your stop loss would have been beneath that swing low somewhere. It would have been. What happened? You got wiped out and it rotated back up. What about up here? If I was short to the short side of the market, where would the stop losses have been? They would have been right there. You got wiped out. So anybody that says stop hunting is not real hasn't been around long enough. Stick around in these markets. You see things like that, especially on a big number. You see compression, wiping out the shorts, wiping out the longs. Happens over and over and over again, especially on short time frames. Be very, very careful if you're trading during this period on short time frames. You can run into more trouble than you can ever imagine, and it can happen fast. Let's go back to our E-mini S&P 500. Right there at bullish. Why is it bullish? There's no reason. A hot jobs number, that's going to lead to what? A bullish dollar. What's that going to do to stocks and commodities? It's going to send them down. Stocks are rising. I don't believe this for a minute. I'm watching this for the US Open, which is coming up in about T-minus an hour, probably for a big correction. I would be surprised if we close in the green today for stocks, but right now the futures are catching some bids. I would love to step up and bid down here, this E-mini S&P 500, down from about 6,057. That's a pretty good one. All right, let's go ahead and go to a CFD. Let's go to the US 100 CFD. Very clear cut for me. Uptrend, clearly. We're making all-time highs. We're getting compressed up here. There's a lot going on in U.S. tech. A lot of the news coming out from China that we're going to start limiting rare earth mineral exports. What is that going to do? It's going to slow down your production of semiconductors, no question. And remember this, a tremendous amount of those semiconductors that the United States imports come from Taiwan. Big time arena that could very, very put the brakes on big tech in 2025 if, in fact, the flow of those materials stops. What I'm saying is this, the upside for tech is hard to argue with. That would be one of your only bearish market drivers. Without getting into a long discussion about nuclear power, the AI boom is here. No question about it. AI is the future. We all know that that's going to spur growth in your US 100, and it's going to be huge. Okay, what is the one thing holding AI back? There's two things, really. Number one's electricity, power, and number two are conductors, things like silver, things like copper. That's tough. That limits the top side for right now, the AI boom. So do you want to buy a pullback here? Absolutely. If I got an opportunity to bid this, of course. Is the top in yet for the NASDAQ? Not even close. Not even close. I'm looking, I would say 22.5 would be a conservative estimate to the top side. But if we get into a rate hike cycle and our interest rate expectations change, and maybe we have a disruption of rare earth minerals, or we don't get the nuclear energy off the ground to support the AI data centers, then yeah, you could definitely see a pullback. But I think you buy dips until we see any of those things really come to fruition. Okay, let me see MRT. Yeah, let me see Calvin. Clean up both sides. The indices up a bit still. Hey, Calvin, how you doing? Yeah, I mean, the indices are what they are. I mean, if you want to take a good look at the US 30 is just this is a textbook, really just a textbook look at my P formation that I always talk about. Amazing run and rotate. Bang, bang. There's your run. There's your rotate. So you're moving sideways. Very bullish. You could definitely say that you're in compression. Why would we be in compression like this with the US 30? Sometimes technical analysis is incredibly simple. 45,000, big round number. No different than 100,000 in Bitcoin. 45 is big. The only number that I could see right now that would be bigger than 45, we'll get some sellers at 47.50. You'll also get some sellers at 50,000. Do we get that high? I mean, this is good compression. I mean, it's still very bullish. As far as a buy would go, I would say, yeah, that's probably the ticket. Let's get back to gold. Gold's just crazy. This is the 5-minute chart. You can see exactly what's happening. This zone down here turned out to be very good. As far as our dollar yen, I mean, this one sort of rotating around back in trouble on that 920 EMA strategy. So, not the best, not the best trade in the world. I'm the first one to admit that, but we're still in it. We're just in compression. I would be very surprised, though, if this one doesn't get stopped out. It just hasn't done a darn thing since we put it on yesterday. We just got to wait and see what happens. Okay, there's a couple other things that I'd like to look at, and sort of perhaps introduce maybe a 9 EMA trade or something like that. We just got to really look and see what's active right now, and this is just a real tough number to sort of gauge. We're starting to see weakness in the U.S. dollar, which doesn't make much sense. You're seeing gold go higher. Take a look at this. If you were long gold like we were, and you got stopped out beneath that spike low just to see the market reverse, you're probably going to have a bad weekend. That's for sure. Yeah, the DXY is sliding. This is one of those things that you look at. You always want to see what the dollar's doing, and there it is. I mean, that's a big-time 5-minute move. You can see if the dollar's coming off now, what does that mean for stocks and commodities? It means they're going to rise. Remember, don't believe what you're seeing right now. Let this thing settle out a little bit. The U.S. Open, opening bell, ding, ding, in about 40 minutes. You're going to be able to trade probably reversal strategies and do just fine on the U.S. equities. I don't think you're going way much higher on this. I really don't. I don't think you're going high. Not today. But interesting stuff right here. Dollar index coming off. Let's take a look at the macros for the dollar index and sort of see exactly where our key levels are. As far as our weekly goes, it's been just a tremendous uptrend. Going back to September, the dollar's been on the march. Realistically, lots going into that. The U.S. election was a big part of it, but also the Fed sort of changing their interest rate expectations, and we're going to look at those in just a second. But right here, as far as downside support for the DXY, if you're trading the DXY, 105.21, something like that, 105-ish. That's a pretty good one. I would be surprised if this dollar takes that out right now. We just got to wait and see. Sort of a counterintuitive move right now. Very difficult to break this one down in real time. I would give this one time to settle. I really would. And we'll look at a cross pair here to get a little insulation from the U.S. dollar stuff. All right, let's go ahead and take a look at the report itself. I haven't read it yet, so let's go ahead and read it. U.S. Bureau of Labor Statistics. Top line, non-farm payroll rose by 227,000 in November. I'm not buying that for a minute. And the unemployment rate changed a little bit, just a little bit, at 4.2%. The U.S. Bureau of Labor Statistics reported today. Okay, I don't care about any of that. Let's get down to business. Remember, the devil's always in the details. Let's go down to the last paragraph. This is what I want to see, and the markets want to see this too. They want to see, are these numbers getting accurate or aren't they? Was there an upward revision, a downward revision? Was last month's 12,000 a mistake? What do we got? The change in total non-farm payroll employment for September was revised up by 32,000. That's convenient. Up by 32,000 from 223 to 255, and the change for October was revised up by 24,000 from 12,000 to 36,000. With these revisions, employment in September and October combined is 56,000 higher than previously reported. There you have it. So the employment situation wasn't quite as bad as we thought last month, but right now it's a little bit better. Still, our numbers aren't great, but this is a blockbuster number. So the real question is, what's this going to do to the Fed? 12 days, T-minus 12 days. I'll have FOMC live for you. We'll get into the sort of the tall grass and see exactly what the Fed's thinking. But we got to get into our interest rate expectations. And a lot of times they do pull down the charts during a big economic release. And here we go. So right now we're at 450 to 475. 425 and 450 is being priced as an 83.9% chance that we are going to get a quarter-point rate cut. Do we cut rates when we have a problem with inflation and strong employment? No, we do not. Be ready for this to change. 83, right now they're pricing in a rate cut 12 days from now of about 83%. I think that's a miss. I think there's an opportunity to make some money and get in on a little bit of market disequilibrium. In my opinion, that 83 is going to look more like a 60, and it won't shock me if that's by Monday or Tuesday. So I think that's overpriced. Our expectations here are definitely out of whack. The jobs market, we had upward revisions to past numbers. We had a big number today. What does all that mean? It means that you can't cut rates when your jobs are sort of better than expected and your inflation is still persistent, still well above the 2% threshold. So I would be very careful pricing out this. I firmly believe this is wrong. We'll see. We'll wait and see what happens here. Let's do a little bit of short-term trading here, though. I do want to go ahead and get back to price action because that's why we're all here, is to make a few bucks. This yen trade, it looks like we're going to get swept out of that. Let's go ahead and see what else we've got cooking here. What else is on the front burner? Let's go to the Euro USD 4-hour. You can see that we're starting to get into overbought territory on that RSI. As soon as we go above 70, we could look to sell this thing. But right now, you've got sort of a big breakout on the 4-hour, and that's really spurred by your NFP report. Let's get down to like a 5-minute chart, though. I get this question a lot. Shane, can I do this on the 5-minute? I'd say, yeah, you can. You just got to really watch yourself, watch your risk. So right here, you've got a news-fueled overbought territory, big time. If you're trading a 5-minute, you would be looking for this 9 EMA to cross the 20. And you could definitely look at that for, quite a while. It's going to take quite a while. You'll notice this spread right here, fairly wide. You'll probably be watching the next 15 bars or so, maybe 10 bars. But that really does take you sort of into that first hour of U.S. trade. And if, in fact, that's the case, you may be able to pick the top of this market using this short time frame today and getting that crossover. So right now we're in overbought territory. Immediately I'm looking to sell the market. I don't want to sell it naked, though, because we could be trending, and that'll completely take all of our money from us. But if that 9 EMA crosses underneath the 20, then, yeah, you're looking to take the sell. Relatively straightforward stuff. Like I said, we'll have the video out, or not early next week. It'll be next Friday. But right there would be sort of your pre NFP spike low. Like if I was trading this thing with my Fibonacci's, it would look something like this. And you can see we already missed the trade. There was your big move, bang, big move, pull back right to 38%, and then a nice rally. That's a beautiful scalp. That's about 10 pips. Now right here, the question begs, do we want to go long? Once again, from 106.10. It doesn't really excite me too much. It's a secondary play. We've already hit that once for some money. Can we take the trade? We could take it. Do we need to take it? No. I would wait. If, in fact, this thing tapers off and you get that crossover, you might be able to take a position short. Definitely something to look at here. But if, in fact, we wanted to trade right now, we could step up with 106.11s and bid. I'm not really too interested in that. Let's go to something else, Great Britain Pound USD, something like this. Basically the same formation. That right there would have been your spike low. So let's go from right there. And now we're coming off a little bit. Do I like this trade better? Yep. Why? Because it hasn't been hit yet. So 127.96. Let's go ahead and buy this thing. Limit order 127.96. And let's go ahead and put a position in there and see what happens. Okay, there's our buy limit. We're looking to get long. Remember, these are demo dollars. Excuse me. Very dry here. Very cold. These are demo dollars, so if you have an opportunity to trade your own size, 1 to 3% of your account on any given trade. And here comes the trade our way. You see right there, interesting spread. Quite, what is our spread? About 2 pips, 1.6, 1.9 pips. That's significant. I would say that's significant. Nice short term. I like this price action, though, and I do like the market structure. Now, we are in overbought territory, but this is a Fibonacci play, so we're looking to get in a little bit on this price action. We're at 196. Okay, there's our trade. We're even. Do we get a bounce? Are we going to get any sort of love here at all? It looks like we're correcting back down into this NFP. This level should give us a decent bounce. Okay, there's a decent bounce. We're up. Where would we be shooting for on this trade? You're probably going to have to put it on and be looking for something like this up in here, 128, something like that, which is about, 4 ticks, somewhere in that area. If you're scalping, you want to limit what you do in the market. You don't want to just wait around and let these things play out. Remember, short time frame. We want to get in. We want to get in and get out. So let's go ahead and put our profit target. I want to go ahead and sell this thing right up here. It'll be right up there at 120. I don't know. We could do something like that, 129.98, somewhere in that. Well, in any case, there you go. So we're long there. We want to go ahead and sell up there right around, I don't know. Fractional pips are what they are, but that would go ahead and that would be your out somewhere right up in there, 99-ish. Do you get it? Is it even worth doing for 3 pips? You would have to trade a lot of leverage to make this worth it. Like right there, we have a 2,000 size. You probably need to trade, maybe probably 20 times that to make this thing worth it. That's one of the reasons why I sort of lean on futures to really get my leverage way up there to make these short trades worth it. But it's an interesting trade. Pressure's on, definitely looking to correct. Where would my stop loss be? You can't really wait around on something like this. So right here, you're down to about 93, 92. I'd be looking to get out here relatively soon and cut my losses. We've got about, 2 minutes left in this 5-minute bar. The pressure's definitely there. We may, in fact, get our crossover trade, which is more of a position trade. But something like this, it gave us a little bit to the top side, but right now, do we believe that we're still headed higher or are we correcting? I would be on the short side of this market. Realistically, we've got a bit of a bounce there from 38%. Didn't even come close to our profit target. Now we're down to about 91. I probably would be looking to stop myself out here relatively soon. I'm not interested in going for the ride. Remember, take your first loss right there. Let's go ahead and just close this thing out, flatten it. That's enough because what's happening? Our market structure is changing dramatically. So right there was your trend play. You were looking to get the bounce from 38%. It didn't work. We lost a few bucks there. But now we're starting to rotate back down into our NFP range. And, it's setting up nicely for that 920 potentially a little bit later on that 5-minute. So remember, if you're going to scalp, if you're going to do short-term stuff like we just did there, you've got to remember, you got to get out. You can't just sit, you can't wait around and just let the market come to you. You got to really be aggressive with your outs. That one right there, we let draw against us a little bit too far, but that's life. We're making 50 decisions. We're doing it on the fly, looking at 50 things. So remember, 1 to 3%, and right there you can see that our stop loss right there, getting out of that market, probably the right thing to do. I think that we're going much lower. Just remember, don't take huge losses during NFP. We're already starting to see the market dynamic come back to what we said it was going to do. You saw that it was an irrational move. It was an irrational move to the top side. It had nothing to do with the fundamentals, and now you're seeing the fundamentals kick in. Big NFP means a hawkish U.S. dollar. That's what it means. There you have it. That's all there is to it, really. So we're coming off 62%. If you're going to scalp those levels, be very, very careful. You just saw 38% didn't do anything for us, really. But now we're coming off. Do you get that retracement in the back end of the golden zone? That was a pretty good bounce, pretty good scalp. I think the U.S. dollar is going to probably rally into positive territory, and I would be very, very surprised if the U.S. indices close positive today. Very surprised. That's just sort of the way that we're looking. All right, let's go ahead and check in on our pet rock again. Dollar yen, what's the dollar yen doing? Right there, you sort of got, there was our entry on that long term, that 4-hour play. I really like the 4-hour chart for our Forex plays. Really nothing's happened. We traded up a little bit. We sold off. I still like this one to the top side, but whether we get stopped out first before we get our rally, that's anybody's guess. That's anybody's guess. As far as commodities go, let's go ahead and take a look at, let's see, dollar, euro, USD. We didn't get quite high enough to get that sell. Let's go right here to our U.S. oil. We always have a lot of folks that love to trade oil and talk about it. All this action, you guys remember those analytics, I imagine, but just big picture, what are we looking at here? Weekly, absolutely nothing's happened weekly. Nothing's happened. We traded beneath last week's low, and we bounced up to our moving average, and now we're back down to right around 67.50. The biggest thing that I would point out here, have these levels down. I've pointed them out a lot on these streams. You guys are probably tired of hearing it, but something like this, that's not your spike low. Remember that. Crude oil was not worth zero. It was worth negative $40. I watch everybody in the financial media miss this almost every single day. At least the commodity guys do. What are you looking for? About 64.50 is a pretty darn good support zone. Crude oil was at negative 40 and then 129 right in there, right around 64. You can see the compression setting up. I would be scalping 64.50s and feeling pretty good about it. Now, as far as, what can we do? The big thing to remember is this. You're on the monthly here. We just started December. Inside month, very tight November. This market's clearly poised for a breakout. My guess is we're going to eventually trade beneath November's low. There's going to be a big washout there. You're probably going to trade beneath October's low as well. Then you're going to go down and probably take a look at 64.50-ish right on the nose. That's going to be a fantastic scalp. It's been beautiful before. You can take a look back there. But the big question is how low do we go? If we have a hawkish dollar, we just had a big jobs report. If that rate cut comes off the table, and then all of a sudden you're talking about drill baby drill in the United States with the Trump administration and no more rate cuts for a while. Downside projection for crude, somewhere in there, 50, 55. Believe me, it can happen fast. That's a huge level. That's the line in the sand. As soon as that level's gone, the bulls are gone, and crude oil will fall away in a big, big way. So right here, how do I trade it right now today? Well, number one, the volume, you got a little bit of volume here from NFP, but what you don't have is you don't have really that U.S. session volume just yet. Now, pretty good volume here on the 30-minute chart. Compression, we're down a little bit. I would say we're down about 1.25%. You could be heading lower. You could be heading lower, especially if the dollar reverses right now. And right now we're in negative territory, about negative 0.18 for the dollar index. If you're trading crude oil, watch the dollar index today. Because if that does rally into positive territory, you're probably going to see the negative price action continue. So I'm watching this closely, but to be brutally honest with you, I'm not real big on trading crude oil Fridays. To me, it doesn't really look like there's much opportunity. And the volume, the U.S. volume comes into the market in about 7 minutes. You'll see a big uptake in volume. As far as, some daily levels that maybe you could trade, you took out that swing low, down here, you got a support zone right around 60. I mean, this is just basic stuff. This is chart reading 101. You got sort of a spike low. a daily double bottom down there right around, what, 66.50? See that right there? Spike low back on the 29th of October. Spike low on the 18th of November. Those are right in the vicinity of price 66 3/4. If you wanted to buy down there, I'd go ahead and let you do it. Just be sure that you get out. If this thing turns into just a route to the downside, get out. Get out, get out, get out, get out, get out. All right, everybody, we are seeing that dollar just not really doing what we thought it was going to do. This dollar yen, this will almost guaranteed to get stopped out. Remember, your stop out's going to be right there, right around 149.61. And as far as your gold trade goes, you're starting to see the negative action in gold as well. This is chaos right now. This is a chaotic day. Right now, the technicals do not match up with the fundamentals, and that's why a lot of us don't trade during NFP. All right, we got a market coming in. Let's see, Euro CAD. Could we look at that? Absolutely. If there's any other markets you guys would like to look at, I'd be more than happy to pull a chart. That's what I'm here for. We sort of had a real big level here. This was a weekly triple, and you can see what happens when a triple bottom gets taken out. We went very, very low there. So now we're rebounding. What could we do potentially to trade this thing? Well, big week, up about 1%. I'm huge on my weekly levels, and I always like to check my longer time frames to make sure there's not an anchor point that's like right in front of my face. Broke above 62%. That's a big time zone. That's a big time zone right there. So 149.12, we broke above that. You got to be looking to the long side of this thing now. So 78% up there. You could sell right up there, probably right around 150.25. You know, do you get over 150? Probably not. But if you did, you could sell up there somewhere. Right now, though, I would be looking to the long side of this market. 149.12 would be a beautiful pullback buy. Let's go ahead and dial this thing down to a daily and see what's happening here. Yeah, there's your breakout. Complete breakout, 50% compression, and then we broke right through. Let's go to a 4-hour. Just steamrolling through 38 or 62% on that weekly. Let's go to a 30-minute. Boy, NFP's sending the euro higher, isn't it? Let's go to a 5-minute. There was sort of our pullback. What do we want to do right now? Got a little bit of commonality down here. 149.14 and 149.12. Long-term 62% did absolutely nothing. Did absolutely nothing as resistance. That's rare. That's steamrolled through a weekly number like it was nobody's business. So what do we want to do? I want to buy. You know, if we get a close beneath this zone, then we could talk about a position sell. Yeah, right there. Let's see. I just got stopped on my 62% sell. I hear you, Bren. That absolutely steamrolled it, and you did the right thing by getting out. You don't want to hold that. I mean, you go from probably 149.10 somewhere in there. Stop yourself out at maybe 29. I don't know where your stop was, but that would have been a real tight trade. Something like this, though, here's your pullback. You know, the real question is, do you want to step up and buy from 149.22s, or do you want to wait for this market to settle down? Yeah, I was shocked I got stopped so quickly. Yeah, that doesn't happen very often. You did the right thing by pulling the plug, though. If this level has no validity, if it has no validity, and it's rare that these things get steamrolled and they don't get debated, you're going up here. You're going to 150.25. You don't want to go for that ride. Unfortunately, that's life in the fast lane. That happens. It doesn't happen very often, I'll tell you that. That's what I'd be looking at, though. Commonality right down here. I fully expect the US dollar to reverse, but I don't know about the Euro CAD. What does this mean? Crude oil's out. Crude oil's coming off a little bit. The euro's going up today. Or is it all just noise? I would love to buy a pullback here, though. Definitely from right down in there. 149.15. Probably a pretty good scalp. Let's go and take a look at one more cross pair. That was a pretty good one. 5 minute for the Aussie CAD. Everything's going to the moon. Canadian dollars on the ropes. Let's go to a weekly here. Interesting. A little bit of a bounce. Go to a daily. Do we want to be long or short, judging by this? It's tough. There's some saturation here. You're definitely getting into doji land when that happens. Very difficult to win. But if you wanted to sell, you'd probably be looking at your dailies. That's tough market structure. That's tough. Inside bar, you're looking for a break and a run. You don't get it. A little bit of a failed auction and a reversal. Something like that. Is it great? No. Can you trade it? Yeah. Where's the entry? Daily moving average, 13-period moving average at 90.87, 90.88. It's probably your short right up there, maybe 90.85. More than likely, that would be your short. How long do you stay in? Where do you hold it? I'd probably be out if we go over 91, so probably 91.09s would be my stop out, somewhere up in here. Something like that. Trade would be relatively straightforward, 15, 23, looking for 25 pips, maybe a reversion back down to this 38%. To take that trade, all you're looking for is compression in this zone, and you might be there a while, judging by how this thing moves. But the Bulls have it. The Bulls have it. Tried to force the market lower, sold off beneath yesterday's low, inside candle. Typically, you get a break, and then you get the reversal. There you go. So I'm watching. If you want to trade cross pairs today, it's not a bad day to do that. Get away from the U.S. dollar. Right now, it's absolute chaos out there. It really is. Tough to say. Tough to say what's going to happen here. All right, everybody, I want to thank you for joining me today for NFP Live. It's been interesting. Absolutely difficult conditions. No two ways about it. I mean, it looks like we're on to something here with this gold trade, but to be real honest, I believe that the dollar-yen, the crossover, yeah, that's out of here. We're not stopped out yet, but this looks to me like it's gone. So big-time reversal. Welcome to NFP. We knew we were gambling. We knew we were gambling coming into that number. Not quite out yet, but it doesn't look good. It doesn't really look too great. Other than that, let's see. We got a comment in the live chat. Let's see. Yeah, let's see. Bren 98. Yeah, the 62% got stopped out on that Euro CAD. Great comments, though. I was shocked it got stopped out so quickly. That happened to me in the E-mini S&P 500 about 3 weeks ago. I had a strong play, a real strong number, and I leveraged up, and the number just swept me out. And one of the best things I did was get out of the market, was just to get out. And that saved me money, but I was shocked. So to really go to some of your comments here, Bryn, sometimes that happens, I guess. Yeah, it happens. It happens a lot around key events like NFP. Like if I was going to say, when do the levels not work? NFP, numbers like today where there's really a huge outlier. And that's exactly what this report is. It's an outlier. I mean, the dollar's just milling around. Doesn't make much sense. Should be in for a dovish correction, I would think, a hawkish correction. That happens sometimes. I don't want it to knock my confidence. Well, I mean, that's where risk management comes in. That's the bottom line. As long as you don't lose the ranch on one trade and you still have enough money to get in there and work towards your financial goals, your confidence should be intact. But it is hard to take a loss that you just don't understand. And you go, well, that shouldn't have happened. And then it happens. And it's like, okay, what do I do? Do I keep trading? Do I step off? For me, the answer after a loss typically is to shut it down and to come back when I feel better, because you're right about the confidence. If your confidence starts lagging, it's very easy to make a small loss a big loss and sort of go right down the loo. And that's what we want to avoid. I mean, you can lose more money in just a few minutes in these markets than you would ever believe. And a lot of it comes from emotional trading, over trading, things like that. And, the other thing is you don't want to abandon that original idea. And that's really one of the issues that I've fought through over the years, that, if something doesn't work, it doesn't work. That's the bottom line. So right here, just to sort of go back to our discussion on the Euro CAD, here's our level. So what you're feeling right now is, okay, I was short here and it didn't work. Now it's reversing and it's coming back down to me. Maybe if I just held on longer. The problem you'll run into is listen, 95% of the time you're going to be right. Just hold on a little longer and maybe my loss can get smaller, or maybe it comes down to break even and I can get out. I'm not kidding you. Maybe you can do that 90% of the time. But I will tell you for a fact, take it from somebody who's been there and watched these things get away from them. You're waiting for this type of price action to happen. What if that happens? Then you're up here. Short from here, and you're still up here. The problem you run into is you start rationalizing things. Not you personally, but me. I've been in this position. Every trader has. You're like, okay, well, I'm holding on. Maybe the 50 mark will work. Maybe 149.50 will work as resistance. Okay, I'll hold it, and then the market breaks above 50, and you're already so committed money-wise that you're like, well, maybe 75 will hold. Well, I'll just try 75, and then it'll sort of mill around a little bit, and then it'll go above. And you're like, well, I was already here. My original stop was at 29. I've already taken another 50 pips. I might as well see if 150 holds. And then it'll come up to 150, and then maybe it'll trade down a little ways. And then what will happen is if it comes back in your favor, then the idea will be, okay, the top's in, I've got it. I'm going to let this thing run. And inevitably, 150 will get taken out. And then when 150 is taken out, you've just lost your account. That's the trap. That's what trading does to people. Things happen really fast, but then they slow down. And what you find yourself is in a position to rationalize your decisions. Well, I'm already stuck 500. I might as well go 1,000. Well, I'm already stuck 1,000. I might as well go 2,000. Well, I mean, it's only half of my account. I can still fight back. Inevitably, if you find yourself thinking that way, you've already lost. Forget it. Your first loss was your best one, no matter how bad it hurt. Believe it. All right, everybody, I'm going to go ahead and sign off for the week. Fantastic stuff. I want to thank everybody for joining us across all our platforms. If you have any questions at all, swing by the How to Trade trading room. Dial in, send me a PM. I'll be sure to get back to you. It looks like our Japanese yen trade just got swept out of the box. That sucks. I'm not real happy about that, but because that thing's going to reverse. Well, maybe we buy right now. Nope. We wait for our signals. We might get some of those 5-minute crossovers to develop in the Euro USD and the Great Britain Pound USD. All right, everybody, extremely difficult NFP report. Came in extremely hot, and the dollar reacted in a negative fashion. Be careful. If you've made a ton of money on the U.S. indices and the dollar, as we go into the U.S. Open, be ready for a reversal. Be ready for a reversal. All right, everybody, have a fantastic weekend. We'll be back here next week. We got some new stuff on YouTube, so go check out the both YouTube channels, the Forex Signals TV YouTube and the How to Trade YouTube if you're interested in some trading tutorials, I guess. Till next time, trade the action well, and we'll talk soon. See you.